Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cracker Barrel Old Country Store Inc. annual report. And Cracker Barrel Old Country Store, Inc. offers a diverse range of businesses and services through its stores across the United States. The company's primary offerings include restaurants serving breakfast, lunch, and dinner dine-in, pickup, and delivery services, gift shops with various items such as plus decorative and functional items, rocking chairs, seasonal gifts, etc., plus apparel, plus toys, plus food and cookware, plus candies and preserves. The Cracker Barrel Old Country Store, Inc. CBRL stock price has remained relatively stable over the past year, with a negligible change of 0.12%. Several significant news events have been reported during this period, but most have resulted in substantial fluctuations rather than minimal changes. One notable exception is the company's routine operational updates and minor marketing initiatives, which are unlikely to cause significant stock price movements. Analyst reports that reiterate existing ratings without new insights or dramatic target price adjustments also tend to have a minimal impact on the stock price. However, most of the reported news events have led to more substantial fluctuations in the stock price. For instance, the Q4 2025 earnings report resulted in a 9.3% drop, and the rebranding controversy caused a monthly decline of about 27%. These significant changes suggest that the company's financial performance and strategic decisions continue to be closely watched by investors. In summary, while there have been several significant news events affecting Cracker Barrel's stock price over the past year, most have resulted in substantial fluctuations rather than minimal changes. The company's routine operational updates and minor marketing initiatives are more likely to cause negligible changes in the stock price. The primary drivers of revenue growth for Cracker Barrel include a 6.8% increase in average check per guest, menu-driven growth through enhancements and new offerings, digital marketing efforts, expansion of e-commerce platform, customer loyalty program, store openings, succession planning, strategic investments, and effective execution of business continuity plans. On the other hand, revenue decline drivers include decreased guest traffic to stores, changes in product mix, increased costs due to health concerns, shifts in consumer dietary preferences, unfavorable publicity, disruptions to IT systems, natural disasters affecting warehouses and personnel, inability to execute business continuity plans, failure to comply with data protection laws, and security breaches or cyber attacks. The company is indeed generating positive operating cash flow. The financial summary clearly indicates that the net cash provided by operating activities has been increasing over the past 2 fiscal years. In 2025, the company reported a significant increase in operating cash flow to $218,899, up from $168,980 in 2024. This trend suggests that the company's operations are generating sufficient cash to cover its expenses and investments, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes. Initially, the debt decreased from $300,000 in 2024 to $345,000 in 2025 on page 46. However, this trend is contradicted by another instance where it decreased by $150,000, page 50. Furthermore, a comparison of specific dates reveals that as of August 1, 2025, the debt was $549,000, whereas on August 2, 2024, it was $180,000. Regarding interest expenses, there is a slight decrease from $20,933 in 2024 to $20,489 in 2025, page 46. This trend is consistent across multiple instances, including page 58. However, another instance on page 72 shows a more substantial decrease from $3,684 in 2024 to $3,337 in 2025. In summary, the company's debt level and interest expenses have shown mixed trends, with some instances indicating decreases and others suggesting increases or inconsistencies. Management's outlook and strategy. The company has a multi-year strategic plan to improve operational and marketing execution, enter new geographic markets, and achieve environmental, social, and governance goals. To drive organic growth, management modified its capital allocation policy to support increased investments in the business. The company plans to leverage technology to enhance guest experience and improve business operations, while also emphasizing employee development and training to deliver high-quality service. Management is concerned about potential risks such as government regulation, changes in laws and regulations, extreme weather conditions, and cybersecurity threats. However, they remain confident in their strategy, citing the strength of the Cracker Barrel brand and their ability to execute their business plan. The company's primary sources of liquidity are cash generated from operations and borrowing capacity under its revolving credit facility. Management expects capital expenditures to be approximately $135,000 to $150,000 in 2026 and is prepared to handle potential supply chain disruptions due to commodity price volatility. Overall, the company's strategy involves a combination of organic growth initiatives, strategic investments, and risk management measures to drive long-term success. The company has a history of rewarding its shareholders through two key initiatives. Firstly, it has consistently paid out dividends to its investors, demonstrating a commitment to sharing profits with those who have invested in the business. Secondly, the company has also engaged in share buybacks, purchasing back shares from the market to reduce the outstanding number of shares and increase earnings per share for existing shareholders. Supply chain disruption concerns loom large. The financial summary highlights several potential risks that could disrupt the company's supply chain. The reliance on single-source products or product lines, uncertain supply of certain items, and longer lead times, page 12, pose significant concerns. Additionally, vendor dependence on foreign-sourced products may have a negative impact on business operations, page 20. Uncertainty in trade policies, tariffs, and regulations could also lead to shortages, interruptions, and price fluctuations due to single supplier risks, page 21. Furthermore, the company's single retail distribution facility and potential inability to execute its business continuity plan may exacerbate supply chain disruption, page 22. Extreme or unseasonable weather conditions can also disrupt deliveries of food and supplies to stores, page 30, as well as severe weather potentially disrupting both in distribution and local store delivery chains, page 40. These concerns underscore the need for the company to develop strategies to mitigate these risks and ensure a stable supply chain. That concludes the financial summary for Cracker Barrel Old Country Store Inc. Feel free to comment below, and I will be happy to answer them when possible.